What's up, everyone? Hope you're all having a very good day. As promised, I wanted to make a recap from the past 2 days. Some decent action, not bad, not the best. However, I do want to highlight pretty much the S&P and Nasdaq, along with some other equities. But from a larger time frame context perspective, I think this is very important to kind of look at the larger picture and kind of see what's going on. And the past, maybe ever since April started, we've been seeing some downtrending action where moves up have been getting sold into, and we have been rejecting supply pretty nicely. And it wasn't until Thursday, Friday of last week, about April 21st, April 22nd, where we saw what I defined. I made a recap video about this. Heavy selling days where we're putting in lower lows, we're putting in lower highs, and we're just aggressively selling all day on Thursday and Friday. So with that in mind, I want you all to understand that this was from a high of 45.09 to a low of 42.50. So that's what is that? A 250 point drop in 2 days. We really haven't seen action like that, but that drop on last Thursday, Friday kind of wiped out all of the gains pretty much from middle of March's rally to the start of April. From this rally right here, that those 2 days kind of wiped out. Keep in mind, think about all the demand zones that we saw in this area. I could draw probably 100 different boxes in this area from this uptrend starting on March 14th to the high around, call it April 1st. There were tons of different demand zones, and in 2 days from the sell-off last week, those got completely destroyed. We saw heavy volume and very heavy selling pressure. So that was a Friday. Going into the new week, we got Monday coming up, and we're selling off right into basically the lows of March's rally. Now, if you remember in the Discord, I'll search this up here. Keep in mind that the search bar in the Discord is a very good tool to use if you want to look something up. So Carmine key, Carmine right. I'm not gonna be able to find it now. Hold on, I'll find it after this and I'll post it. So the key, the zones that I label as key are usually the ones that are near a high or low. I don't know why this is not searching for my name now. Ones that are near a high or a low, and in this example, this is the low from basically March's rally. And we saw some nice lower wicks in this area. We also saw 3 different tests, and it also coincided with basically the start of that rally in mid-March. So this was a key zone that I said we must hold. And going into the weekend, we had this zone on watch after a bloodbath of demand zones getting destroyed. The market opened up on Monday, and we sold off into this demand zone, hit it multiple different times. And honestly, if you're watching even the tape, this provided a couple different opportunities to basically scalp a bounce off demand. Now, this kind of goes with knowing how you like to trade. For someone that is trend trading this bounce off of demand, if we got long, let's just say this first bounce out of here and a rally up, we probably would have got stopped out because we would want a larger move to the upside. However, for those that are scalping, we could have got a nice 25 point rally out of this demand zone, came back, retested it, was good for another 20 points, came back down and didn't show really clean signs of buying just yet. But know your time frame, know if you're scalping, know if you're trend trading. For me and how I've been trading, I've been capitalizing on these smaller moves like this, having closer profit targets. It's not really how much or how long I'm holding the trade. It's more of where my profit targets are. And if I'm getting quick entries, basically scalping using the tape, then my targets are kind of more realistic and closer to my entry as long as I maintain my proper risk to reward. Whereas if you're trend trading this, yeah, it would have worked out. Yeah, we could have got a bounce out of that zone. But it depends on where your entry is. So how I'm trading right now, I would say probably 90% of my trades are on the S&P. And I've been using equities to kind of confirm the setups. I want to get into that with the next trade that I took. But 90% of my trades have been quick scalps. And I've been taking my profits pretty fast and going in with larger size. But a mistake on my end, this is yesterday, was I got out for a break-even trade. I meant to add to my position. Instead, I sold the full position because I never got filled my full position. But I will explain that. But a point I want to make before I get into this trade was everybody was super, super bearish all over Twitter. I saw a bunch of people in Discord talking about, I'm playing puts at the open. This thing is going to sell off. And yeah, in the first half hour, we did sell off. But if someone's sitting at their chair and watching the market all day, or even in the first half hour of the market open on Monday, they're going to see this sell off and they're going to think, oh, it's the end of the world. We're going to get downside continuation. And I think playing puts anywhere in this area could have worked. Yeah, you can make money off of it. But the better setup was waiting to see how price reacted off demand. And we got a clean bounce off of that. So just because in the first 2 hours we really didn't have any clear action, it didn't make it right to get long just yet. It also didn't make it right to get short just yet either. This is where patience comes into the picture. And a lot of people, I see it, they force setups in areas like this where there isn't enough information to come up with a quality setup just yet. And again, I could really only speak for myself, but seeing this chart right here in the first 2 hours, there's nothing of quality that really sparks its interest. We're still at this key demand zone that we haven't really tested yet and proved buyers are strong or weak. And we aren't weak enough to play puts just yet either. And this is kind of what I said today. I'm going to break this down as well the further into this video. But I said, opening up a new long position could work, but it's lower probability. And being short could also work, but from a risk to reward perspective, it's really not in our favor. So I'm not referring to this action, but it's very, very similar. So then we came into demand and then we got a clean bounce. Now, if I remember correctly, I posted my fills in the Discord. I bottom ticked this SPY trade yesterday, and I got a live recording of what I saw on the tape. Now, every time I post these bookmap videos, I get tons of questions. There is a bookmap resource tab in the Discord. There's some videos in here, and there's some information on bookmap. I do plan on adding more personal videos on how I personally do use bookmap, because some things in here I don't personally use but are important to know. And I will add tons of more personal videos on that. So bookmap is good for me to show you all because I recorded it and you could see what happened in the past. Something you're not going to see off of the chart. But what happens here is, I'm going to show you what it looked like on the chart. So the market was selling off below 4,200 bucks right here. And we start selling. I'm going to see if I can make this a little smaller. Cannot do that. So this is basically what the chart looked like right here to the right, and this is what bookmap looked like at this point. Now, something to keep in mind was watch what happened. I got long at 11:56 Eastern after basically an all-day sell-off and the past 2 days all-day selling off. So this was really the first sign of buyers that I saw, and what made me get long at demand, keep in mind, we had demand at 42.06. We're about 10 points into it, was watch the shift in buy volume that came in, and really what made me get long. Keep in mind, I got long at 11:56 Eastern. So this is the sole reason why I got long on the S&P, is watch what happens here. So we're below 4,200 bucks. The market started to see some aggressive sell orders coming into the picture. You can see right here, right? We're below 4,200 bucks. It's key whole psychological support. And look at the buy prints that start coming through. It kind of switches now to green, which is not significant in its own. You kind of use more context to support this. But really, the sole reason why I entered this trade and why I was anticipating scalping this was this right here. So the market's going to come up above 42.01. And what you're going to see here is as we come up, there's going to be a very large passive buyer for over 800 lots or 700 lots around 4,200 bucks. You're going to see a very large red line up here as the market comes up right here. So as we're trying to bounce out of demand and reclaim 4,200 bucks, we have a very large passive buyer at for 723 lots as the market's moving up after such a weak 2.5 days. Now, this is something out of the ordinary. You don't really see this too often. That's very big size compared to what we're seeing on the book. And on top of that, we are, selling off, and we are slowly starting to see aggressive buy orders come into the market. So how I view this is there's a buyer that's waiting to get filled a very large position, and you're going to see what happens here is the market pulls back into it. Try to zoom in a little bit here. The market pulls back into it, and a very large aggressive sell order hits into the market. How we view this, or what I make out of this, is maybe this buyer was forcing the market to kind of look bearish, come down, some sellers hit the market. His order got filled passively, and then the reaction after his 700 lot order got filled. How do I know it's going to get filled? You'll see here I have a session volume profile on, and right now at 4,200 bucks, there's 1,700 lots that got sold at that price. But we know he gets filled because you're going to see a very large red dot there indicating very large aggressive sell orders basically filled his passive buy order. And on the volume profile, we're going to see the completed transaction. So watch this right here. Hopefully I zoom in time. Yep, watch this. So look, still there, 700. 1,700 lots sold at 4,200 bucks. And then boom, aggressive seller just hit the market. That buyer got filled 700 lots. We know he got filled because it showed up as a completed transaction on the volume profile. Very large green sell dot right here. Many people would view this as a very aggressive seller into the market. However, with the green dots and, books slowly starting to turn towards the buy side and this very large buyer got filled. Now with this in mind, my job is to see if I could find aggressive buy orders continuing to come into the market to really spark interest to the upside. And once I get those green dots showing more aggression that this buyer really got filled, you get long. So I'm long right now as soon as I seen this. Stop loss below the low. And we really just consolidated right here. And I meant to add to my position when we sold down like this to retest 4,200 bucks because I never got filled my full position. And instead of adding, and I sold my full contract. And it was a really big mistake because watch what happens here. We defended that 4,200 mark. And then look at the aggressive buying that starts coming into the market. We're now out of demand. More aggressive buying. So now we have that buyer that came in earlier down here. Now we start seeing aggressive buying out of that area, kind of validated this trade to the long side. And now it's game on to the long side. More aggressive buying came in. Look at that. Look at that. So this is the low right here where my cursor's at. Look at how the book kind of flipped to the aggressive buy side when we spotted that passive buyer that got filled at the lows. So I basically bottom ticked this. My execution was awful. I really wish I got filled my full position. I didn't mess up the execution because these went from $1 to I think like $6 by end of day. So clean bounce out of that. That was a good confirmation to get long just using the tape. You don't need Bookmap to do it. And we had a clean rally. And that's kind of why I had conviction out of this trade. To add on to that, it was a key zone at the bottom of the demand zone. And for some reason, it's not letting me pull up the thing in Discord about the key zones. See if I can pull it up here. No, I can't. It's not letting me for some reason. Okay, so that was basically Monday's action. So hard for me to be bearish. I was very bullish at the zone. Clean bounce out of that. Terrible execution on my end. Showing you the flip of the book. Basically leaning towards the bull side. And what you could have used as confirmation to bounce out of that demand zone. So that was Monday's action. Now we got Tuesday's action. So Tuesday was we gapped up and we had the new demand zones that formed from Monday's action, from that rally to the upside. So the market opened up and we started selling off aggressively. Now, we started selling off and we really didn't find show signs of buying at this demand zone. And I kind of want to briefly go over what I saw in intraday commentary. So today was a hard day, to be honest with you, because it depends on how you view the market and the type of trade or the analysis that you're going to take. Now, yeah, we have demand here, but I took a short position even though we had demand because I really didn't find signs of buyers. Now, that could have very well reversed on me. I'm not a huge fan of playing short when there's demand near. However, the intraday action kind of leaned towards the bear side. So one thing I want to note is NASDAQ. I'll pull up NASDAQ first here. NASDAQ in the first, 15 minutes, aggressive sell-off. There's not one sign of buyers at this demand zone. Very heavy selling pressure, consistent red candles, consistent lower lows. And it became very apparent that at 9:45, even 9:50, even 10 o'clock, that there was no signs of buyers on NASDAQ. Now, with this analysis, we also had other names. This is why I think it's very important for you to have a screen with names like Apple, Amazon, Facebook, Microsoft, Tesla, Google. Have a screen if you do have multiple monitors dedicated to those names, because if you were watching, look at this, Apple didn't have any demand nearby, didn't have any support nearby, and it was a very clean sell-off. We had another name, Amazon. No signs of buying at the open, very aggressive sell-off, did not have demand, did not have any support. Facebook, very aggressive sell-off as well. Microsoft, very aggressive sell-off, invalidated this demand zone. So a lot of other market-leading equity names invalidated demand. This is why I think it's very difficult to play market-leading names right now if we do not have market confirmation, because we see so many zones get destroyed because of such volatility in the market. So that's why I think right now my bread and butter is ES and NQ, and I've been trading very, very well with them. So we started selling off, and we had a name like Tesla. This was in the pre-market plan. We were watching a 976 break to the downside. Once we broke below 976, this thing sold off, targeting 950, hit target, and this thing was just an all-day sell-off, showing no signs of buyers just yet as I'm recording this. And because of this, some people, I agree, it was not the cleanest setup shorting 976 demand, because if you viewed, or 976 support, because if you viewed the market that it was in demand or we had demand nearby, then yeah, Tesla might have or could have bounced. Let me pull this up here. Tesla could have bounced as well off of maybe 976 or off of 950, because the market also had demand to the downside, both ES and NQ. However, looking at other market-leading equities, they were weak. And looking at the intraday context of ES and NQ, they also were extremely weak as well. Basically, ES and NQ are made up because of these equities. So if these equities are aggressively selling off, pretty much all of them, if we go to the Market Watch tab, look at the blood map or the heat map on the S&P. Pretty much everything is red besides energy right now. So if these names start bouncing, then yeah, the market may bounce off demand. But just because the market is at demand and these names are not weak doesn't mean that the market isn't going to continue to sell lower and break below demand and kind of support this analysis on Tesla. So this was a clean break, very heavy volume around that level, and solid sell-off. This was a stress-free trade. Now the S&P, I played this to the market short today, and I kind of want to go over my analysis because it was kind of contradicting. Because at 1 minute I said I'm not interested in putting a trade on, and then 2 minutes later I entered a nice setup. So, Tesla. Okay, so I got a lot of questions about this, and I kind of want to clear it up. So I'm gonna pull up Bookmap here. You could kind of see it from this image that every time the market tries to move up, we fail. We try to move up, we fail. We try to move up, we fail. Right? So how I view this is either a seller passively in the market, basically removing his liquidity, pulling his offer off, pulling his position off of the offer, and letting the liquidity buyers start stepping into the market, increase price going up, and he might be on the other side, basically selling to these buyers. And we kind of got validation to that because the market after that continued to sell off to the downside. So how I view this is basically fake volume or just a liquidity push for someone else on the offer, or basically a seller to kind of get filled their position while attracting many longs. So this is just basically how I read it. I'm going to go to what it looked like over here. So you can see strong green volume coming into the market. It looks like we're going to bounce. A buyer gets filled down here, strong green volume, it looks like we're going to bounce. We fail, right? Strong green volume comes into the market, we fail over here. And this is where I took my setup. But it just looked like every rally got sold into. Now, do we know if there's a seller basically getting into a really large position? No, but it's very possible. Do we know if these buyers are true buyers and the market may reverse to the upside? We don't know that, but it could very well happen. But I use these clues to kind of give me more pieces of information. And if I can see something of quality in the market, then I'll react upon it. So as the market was selling off today, we were above this 42.37 demand zone. And in the intraday commentary tab, I basically put every move up with strong buying gets sold into. We move up, and the seller is sitting there passively absorbing all those buyers on the way up, and he immediately hits the market down. It's not bullish here until a reaction becomes different. I said this usually leads to a large sell-off. However, based on how I trade, I still can't be too bearish above 42.37. It's very, very difficult. So we had the demand zone that we bounced off yesterday, and we also had the new zone that formed because of that rally yesterday as well. Then at 10:07, I posted a little update. And basically, to sum it up, I said I'm being patient at these levels. The market could go either way. It could go in either direction. When I feel like this, I know probabilities are not in my favor, so I hold off until I could properly get a feel with the action. Now, I recall Dylan talking about this in his recap video yesterday as well, that all the market is a probabilities game. You have to know when the probabilities are in your favor, and if they're not in your favor, either A, don't trade it at all, which I recommend, or B, trade smaller size. And I think this Tesla example, when it really wasn't all leaning towards the downside, I think, yeah, in hindsight this worked out very well. But if you didn't take it, don't worry about it, or maybe just trade smaller size because the probabilities before the sell-off wasn't leaning 100% towards the bear side. So if probabilities are not in my favor, I personally don't take the trade, or I trade with smaller size. So at 10:12, a minute before I got in my entry, I wanted to get in a little before, but honestly, not to make an excuse, I was posting this so you all could kind of get in the same trade. Maybe this is a sign to maybe start doing a voice chat more often. But same thing, the same analysis here. We had this move up, failed. Then we saw another move up, and I wanted the same reaction to happen. If we could start moving up and we could start seeing some aggressive sellers come into the market, similar to what we saw earlier after we sold off, then I would be open to playing puts to the downside. Expecting rallies to fail here, watching selling pressure below, it's supposed to say 42, 43, to play puts targeting the demand zone lower, and it happened a minute after I posted, or 4 minutes after I posted that I'm being patient. It happened. So it's just about reacting, Saw this move up. I saw buying pressure come into the market, but it really failed right after. And I wanted to get short at 10:12. Instead, I got short at 10:13. I'll mark it here on the chart. Right at this candle right here. Anticipating a quick break below, targeting the demand. It was going to be a very, very quick scalp. And then, boom, 2 minutes later, we got that quick move down. And let's see, we're over here. So we got that quick move down. I want to see what Bookmap looked like at this time because I really don't remember. So here's that liquidity push, right? Here's that push right here. Buyers coming to the market, immediately got hit back down lower, and then we saw aggressive selling coming below, kind of validated this push inside of demand. And we really, 4237 is demand right in this area. We really didn't find any signs of buying, and I scaled out 80% of my position at 10:18 when we broke below 4230. Contracts went up, I think, 80 cents in 4 minutes. Very quick scalping trade. And then I held the remaining of my position to 10:23 when the market looked like this down here. And yeah, I missed out on a couple more gains, but it was a quick scalp. I anticipated on just getting out at demand, but it was just recognizing that this rally was going to fail, seeing selling pressure come after it, take the trade short, stop loss above. Pretty much was a trade where I wanted it to work out right away. And if it didn't work out right away, it wasn't going to work out to begin with, and I was probably going to stop out. I didn't really have a monetary or a number amount of where I was going to stop out. It was kind of like one of those trades that it's got to work right now or else my analysis is incorrect. And we had a clean sell-off, hit demand, and then continued to sell off into this 4206 zone. And, it's hard being bullish or bearish here. Buyers are not showing up, but it's also hard to be bearish because right now we're still at yesterday's lows. We're not selling off, and I don't really see a good sign to get short at the moment. It's probabilities are not really in our favor right now. And a lot of people can't accept that because they see the market moving up or down and they freak out, or they think they have to always be in the moving market. Whereas if probabilities are not in your favor, then you're just gonna make it difficult on yourself. So that's pretty much it. This trade was very simple of analysis. That goes to show you to kind of react to what the market gives you and not have a bias. So I'm going to end it on that note. I didn't really, this was kind of an impromptu video. If you have any questions or feedback, I would really appreciate it in the main chat. Let's see what you guys are saying. How do I approach a breakdown in demand? I think I went over that. It's very hard playing short inside of demand, but you know, if you use the past Thursday and Friday to kind of figure out how you could get short, I think if you study these 2 days and backtest these days, it would kind of give you a good clue of how to get short, especially a day like today where we found no signs of buying at this demand. So I think if you backtest those 3 days, it'll give you a good sign. Larger time frame context. What are my thoughts on the pulse of the market from a daily and up time? I mean, right now, I think we're in a very larger time frame balance, and we're going to consolidate for a little while. I wouldn't be surprised if we break the lows. However, I'm remaining objective. I do think that these zones will hold, especially if 4,200 doesn't hold, then I would expect us to break these March lows. And if we do that, we're probably going to test 4,000 and the lows back from May of 21. I think these are two good reference areas. And if we don't break those, then we are going to balance as we await earnings. And above 4,200 and below 4,600, we're going to be in balance. So that's why we're not really seeing the cleanest of setups, because we are in a larger time frame balance. All right, I think that's it. I'd appreciate feedback. I'll talk to you tomorrow.